Good afternoon, traders. This is Chris Buss with Traders Profit Compass with a mid-session update for Friday, September 4th. What I want to do, guys, is do kind of a little strategy session for how to handle this afternoon if you're an active trader, and also hit on if you're trading the daily time frame, how to kind of handle it heading into this important 3-day weekend. Important not because it's a holiday, but because it's a 3-day weekend, and we kind of want to see where traders are positioning themselves into the close of the day. That can possibly inform us of, how we want to position over the weekend if we want to take a position at all. So we had the continuation sell-off today, this daily time frame on SPY. We came down and we touched this 335 level, which we had pre-identified last night, and now we're bouncing. As we discussed last night, I'm not going to go through it in detail, but as we discussed last night, I wouldn't be shocked if they bounce it and park it right on the trend line, so you have to guess for over the weekend. If you have a long bias, I would trim any loose longs that you have that you really don't have commitment. I would take my risk down. If I was a swing trader, position trader, and I'm anticipating further selling next week, unless they do something miraculous this afternoon. I still can't see a ton of people going risk on into this weekend. And I think if anything, they're going to park it right here on the line where we got to guess. But I don't think they're going to, make appreciable progress into the channel after this touch. Let's look at the 30-minute chart. What I've done here is drop the fib retracements from the whole move, from yesterday's high to today's low. This is a live chart, so you can see exactly where we're at. If they can rally price into one of these fib zones, I don't know if they can, but if they can, I think these locations would be prime to put on a whatever size. I mean, I'm not going to go big, and I really wouldn't suggest you either, but if you wanted to carry something over the weekend, my confidence level would be greatly heightened if we can get a push into one of these lower, the higher the better, but at least one of these fibs. If all they can do is get down in here at 340, my confidence wouldn't be as high. You want to short highs, and if you were on your toes this morning, we did get a little push, and then that rejection there, that would have been a great place to anchor short. I hope you got in somewhere. And even on a break of the low down here at 343, that was still a nice plunge. Several guys in the trading room, both in futures and in options, had gotten in somewhere in this area and at a minimum on the break of the low, and had taken it down and covered in this area. So we're looking for a high bounce that we can short and reduce our risk for anything that we want to take over the weekend. And I will say, I've seen a decent number of put buying for Tuesday and Wednesday of next week on SPY. I saw a lot of 228s going off for Tuesday, so they're looking for further downside. And also, I'm going to go back to this here. That 33.90 on SPX, the prior high in February, technically speaking, they got to close above that. Or, like we said before, all this looks fake breakout, close below. I think that would be pretty bearish and would probably have some bearish implications longer term if they can't get it back above this 33.90. So that's where we're out on SPY. Qs, basically a tag of the 50. Now they're rallying it. We've got this channel line here at 283, 284. Watch for them to see if they can close it right on that line. Heading into Friday to keep everybody guessing. Here are the fib retracements on the QQQ. What is this? What do I got here? Sorry. 30-minute chart. This 284. If they can make it to there, and if they make it to 288, even better, I would be interested in a short over the weekend and into next week if they can bounce it up into these areas. I don't think they're done yet. I've seen enough. I don't think this is going to be just a 2-day and then jump back in. I think we're going to see some further selling on Tuesday. Then what they might do is bring it up here. Then Tuesday, come back for a retest of the low. Then they might be able to save it right there. But I think they're going to do something either this afternoon or over the weekend where they come back. If they can get up in here and you can set a stop above this afternoon, I think that would be a good place for an intraday play if they cascade it this afternoon. Because as we talked about, who wants to get long? That's in the back of my mind. Who wants to get long into this weekend? I can't see it. Not after all this selling. I think this is just a reflexive rally, short covering rally. If they get it up in here, especially if they got to 288, I think it's going to fail. I think it's going to roll over. And if you can anchor something against one of these fibs, 2 o'clock this afternoon, something like that, I think it fades into the close. We'll see. But another thing you can do to reduce your risk is buy a spread. If you can get, something up in this area, you can get, you can put a $10 spread on, and that'll give you a little leeway if they go up a little bit. But then if they come down, you'll have yourself a nice $10 or $15 spread, depending on where you do it. And that is where I would target. I would target a back test of today's low. I think that's what they're gonna ultimately try to do. And then if that low breaks, then it's a whole new ball game. So IWM, I closed out. I told you I had a few puts, nothing. I'm not retiring on Monday. Let's put it that way. It wasn't a lot. They opened high. And then on this break of 55, if you weren't in, as we've discussed 100 times, anything below 155 was a short. Came back down here, broke yesterday's low. That was another entry point at 153. We said 150 was support and the target. This was an overshoot on big downside momentum, and now they're bouncing it. And they haven't bounced it very far So, if they got up to 153, I think you could put something on there. I don't think they're going to get up to 154, 155. I mean, that would be a dream scenario for them to ramp it up to 155. I would definitely hit it there. But I think if you got something in this area, I mean, it's not a big play. It's not like SPY or QQQ. I think some of these guys are buying some of these smaller, junky value names, and that's, kind of holding up the show here. But you're not going to have to risk as much either. Those SPY and QQQ puts are going to be expensive, and you're not going to be able to buy, a boatload of them like you would have been able to do, before all this happened. So anyhow, 153 is the line. Facebook, I think you got to wait. You either got to wait for this to break, or you got to wait for a back test of this 292.30. That would be a beautiful place on a back test. And it may take several days. But if there's a rally, I think if this market's going to roll over, I think that's going to fail right there at this big volume over price bar. And the reason I would not be interested, no matter where the fibs are, is this big void. There's too much air in this area to establish any kind of position. I think you got to be, short against this 278.75 and look for a move down towards 266, 261, or hope that you get a bounce up to 292. I wouldn't take anything in the middle. Apple, been seeing a lot of put buying. You can see here they've already bounced it up to the 38% fib level. If you're really active and you're going to manage it the rest of the day, that's fine. But I wouldn't, I like to shoot against major resistance or major support. This is too much out in space for me. I would want to, if it got back to 123, I would be there, because this is a giant fake breakout. This is massive resistance now. I don't think it makes it through. If you saw Apple back at 123, I would be on that with a stop just above, looking for at least a back touch of this low down here at 115, 114. And we talked about those levels last night. So yeah, I would go up here or on a break of these levels here and take it down. Amazon, a beautiful study in TA. They took it down. They stopped it on a dime at 335. They tried a little rally that failed. And then once yesterday's low broke, it was over. And down we came. Look at where it stopped. Right on this line we've had in there for weeks and weeks and weeks. I think it's 31.10. Yeah, we had it right in there. And now they've bounced it. If you could get something up in this 3290 area, 3000 area, you've got pretty good volume over price resistance there. I think it has trouble. If you got up to 335, I would be motivated there as well. I don't think you're going to see 3400, but if you do, that's even more compelling as far as I'm concerned. So some pretty nice levels there to shoot against. Like I said, it either all plays out the way I'm talking about, or it doesn't. I don't think there's going to be any in between. If they V-shape, 2-day, that was it, I'm definitely wrong. That's why you got to have your stops in place. But I don't think so. Too much impulsive selling. I think there's going to be a reflexive bounce. Inexperienced retail traders are going to say, look at me, I got the low. They're going to run it up to one of these fib levels, and then they're going to get run over. I just think that's the way it's going to go. And whether they get run over and we, start a major downside correction, I can't say. I just think they're coming back to today's low for a double check. That's what I think. Microsoft, look where it stopped, right where we talked about on this break of this 60-minute uptrend line. We opened right here. We had a push up to back touch that line, and then they pulled the rug out. If you could get a back touch here, that would be a beautiful short, because I don't think they take it above 222. I really don't. I think they could get to 220 on a massive bounce, but they better start working fast, or they're not even going to make 38%. I think that's a decent level on this one. I don't think Microsoft is going to go down as much as some of the other ones, but I think this is a decent level here at 215, and then bring it back to 204 for a check. Google gave all that back. I think they parked it in here at 1630. I think last night I said they had to hold that line. They couldn't do it. Came up, failed, and I mean, look where it stopped, guys. I looked on the thing. The low today was 1537.97. Right on the money, right on this prior pre-identified area, and now they're trying to bounce it. This is a live chart, so they're failing. They're failing to try and bounce it. So, I wouldn't short this one into the hole. If they can't bounce it, I wouldn't. If they're down in here at the end of the day, just let it go. Just let it go and pick it up on Tuesday. You don't have any margin of error here. If they were to bounce it or try something on Tuesday with a gap up or something like that, you'd be dead. If you got up in here, you got a much higher margin of error. I called this one out in the trading room. We didn't talk about it a lot last night on the daily time frame, but this 518 was key. It opened here with this little bear flag, and I said, if 518 breaks, you got a free ride, you got a free shot. That's exactly what happened. Now they're trying to bounce it. If you got up this afternoon into 520, I would be a motivated seller right there, because again, I think they're going to come back and retest that. I would set your stop just above. I don't think it breaks back above 520 today. I think that would be a good location at a 50% halfback. While I'm on the idea of halfback, if you're trading something, any ticker today or any time really, if you get an impulsive move where you covered down here or you missed the move, if you get a bounce, a half back way bounce, which is another way of saying a 50% retracement. That's oftentimes a great place to enter in the prevailing trend. So this trend would be down, bounces back 50%. That's your entry point. Very good rule of thumb, and one you should kind of pencil in. So then you can set your stop just above. If you're wrong, paper cut. If you're right, you got a big winner in your hands. I wanted to look at SMH semiconductors. Tag the 50 today, which of course is an important level. Jumping over to the daily chart. Yeah, this is a live chart. If we could get a bounce back to 175, great place to enter a short. This 173, I think would be okay as well, because we've got a big volume over price bar here. I think it stops right there. I think they can get up to that 173. I would be a motivated seller there. I don't think they're going to be able to break that just because of this. Spent a lot of time trading in this area. And, as we've said before, I think all this is fake. Unless they can somehow close above, and I don't think they're going to be able to do it. They've already lost the 60-minute trend line. I think this 38% is going to be the best that they can do. I want to point out some of these sectors for you, just on the daily time frame, not getting down to 60-minute level. But if you're not comfortable, with these fast-moving names, Facebook and Google, just wait for a daily break. Here that we talked about it yesterday. They lost the midpoint, came down for a perfect touch of the channel. And whenever you see that, it validates that line even more, because now we've got 1, 2, 3, 4 touches in conjunction with the 50. That's a great line. And if it breaks, then you can play the short side on the daily chart of the XLC, and you're not going to have that crazy volatility that you would, in a Google, where the options are really expensive and really jacked. So this is a kind of a backdoor way you could participate without, all the headaches of a Google option that's, over $1,000. You could take more of a position out in time for a lot lower barrier to entry. Keep this 34 alarmed in your platform for XLE, especially if you don't want to get into, trading oil directly, or the exploration names, all that kind of stuff. If it loses 34, I think we find 32 quickly, and then all bets are off if we break 32. That would be a nice entry for somebody, on the daily time frame. Because if we go risk off, everything's going risk off. And if we see oil break down, if you look at the chart, it's been in a huge consolidation, toggling between, 40 and 42.50, 43. If you see 40 being lost on oil and XLE losing 34 in a risk-off moment, this is coming down. XLF, little fake back touch of this double top layer here, pinned between the 200 and this top. Just let this one go and see what happens at 24.50. If everything goes risk off, this is going to come down to 2450 and tag this 50 EMA, then we'll decide, is it over, or if it breaks, then we're targeting this 2250 again at the bottom of the box. XLI, key off of 76. If 76 breaks, I think you got 74. Nothing's in the bag, but I think they would come down and touch the 50 at least. Maybe put in a back test, then pull the rug lower. But I think if you lose 76, we're going to 74. Here's the big one. And again, the magic of TA and the moving averages. Got the big breakdown. Tag of the 50. If you had been short or got short, great place to cover that position. Got a nice bounce. Wouldn't be surprised if they close it right here on the trend line and keep you guessing. But at this point, as you've probably figured out, my guess is lower on Tuesday. Don't go out there with a lot of risk, but if you want to take a shot at something, I would be looking for a downside move on Monday night into at least Tuesday morning with a back test of some of these lower levels. I don't know if this is a live chart. It's not. Let's see what's going on. Not much of a bounce. Sitting right here on the 50. Don't do anything with this now. I don't think it's worth it. If we're sitting at 105, let's just mark an alarm 104. If we get a close below 104, this breakout was fake. And then we come down probably for a test of the 200 because there's not a lot going on in this little air pocket. I think things would pick up speed and we'd come down to this 101, 100 zone for a 200 EMA test. Okay, that's it for the charts. Again, if it gets crazy this afternoon, it'll be really difficult for me to, compose another email and, another video. Watch for the bounce. Watch for your fib retracements. The higher the bounce, the better. If it closes low, or if it breaks today's low, the risk of a cascade, a waterfall sell-off into a Friday afternoon, Labor Day weekend is greatly elevated. Okay? If you're an intraday trader and you see that break of today's low, you can get short with a stop above and just see how they close it. If you weren't already in from a bounce and you're sitting there at 2:15 this afternoon and they start a Friday afternoon flush, you can get short and then you can hope for a waterfall. And I think if that happens, I don't think anybody's stepping in at 3:15 this afternoon to stop it. And then if that happens, all bets are off for Tuesday because bad selling doesn't stop on a Friday. So those are all hypotheticals. That's not a prediction. That's a hypothesis. Wait to see it in the charts. But that's all I'm telling you. I think they'll have a tough time this afternoon just because of the selling that's already happened and the fact that we're heading into a 3-day weekend. If they do bounce it hard, great. That gives us more opportunity if they roll it over next week. And if they continue to bounce it, we get out with a paper cut after taking, a shot over the weekend. And speaking of that weekend positioning, only risk what you're fine in losing. This is not a massive pile-in moment. I'm not willing to take that risk, and I don't think you should either. Fine, take a shot. It's a Vegas shot. Expect to lose, but I think the odds are in our favor. If we play it smart at the right levels, it's a calculated risk. And if they bounce it Tuesday morning, they bounce it, and don't forget that you would have the rest of the week till Friday for that to play out. It's not just a Tuesday deal, of course, unless you're buying SPY puts for Tuesday expiration. I wouldn't particularly do that because you want at least a little margin of error. If you're going to take a shot at SPY, I would buy them for Wednesday, not Tuesday. And then if they gap it down on Tuesday, you can close for the win. If they do a baby bounce or something on Tuesday morning and then pull the rug, you still got time to get out. Because if you get them for Tuesday expiration and they bounce it, you're going to lose a lot of value just in time for the day. So I wouldn't get them for Tuesday unless it's just a pure lottery pick. I would get them for Wednesday and give yourself in the market a little bit of time to have our thesis play out. So just talking off the cuff here. I hope it helps. Don't get into trouble over the weekend. If you're not sure, just step aside and enjoy that 3-day weekend. Recharge your batteries, and we'll tackle it Tuesday morning. The market will still be there. Still be plenty of opportunities. So if you're not sure, if you're not confident, if you don't want to take the weekend risk, that's the beauty of this game. You get to decide when to participate and when to step aside. And this would be a great weekend if taking that risk is not your thing, simply to enjoy the weekend, and we'll set up some good plays for next week. So I hope it helped. If you're new to the channel, hit the like button and subscribe. I really appreciate it. And over in the show notes, you can subscribe to the blog and all my content. That would be great. I'll keep your funnel full of ideas and commentary to help get you through this market turbulence. This has been Chris Buss with Traders Profit Compass. Talk to you next time.